through storms, unshaken, unbowed, through trials and verdicts, still standing proud, a titan in the tempest, against the raging crowd. He's got a vision for the future, gonna shout it loud. Change in the wind, it's coming fast, a new foundation built to last. Cryptocurrency's the key, make the big switch, power to the people, time to teach the rich. Legal battles can't hold him, he's moving on, with plans so bold, from dusk till dawn. He's rewriting the rules, a new dawn's day, from the hands of the few to the people's way. Say goodbye to all chains, embrace the new, a financial revolution fair and true, for the workers, the dreamers, side by side, in Trump's new era, let freedom rise. Change in the wind, it's coming fast, a new foundation built to last. Cryptocurrency's the key, make the big switch, power to the people, time to ditch the rich. He's a fighter, a leader with a plan to share, a world of justice, well spread fair. Forget the old guards, the time is done, under the banner of Trump, we all have won!
Welcome everyone to the Crazy Cryptonaut channel. I am Zester, and thank you guys so much for joining me on this fine Monday. I hope everyone out there is having an awesome start to the week. And yes, it is preparing for a crazy one. Good morning, Mile High Trish. Everyone ready for a new and crazy week? I am strapped in to the seat, ready to go. I think we are about to have quite the crazy one. And we'll start talking about that right after we go through good mornings. But remember, March 1st deadline was set on the Clarity Act. That means this coming week, considering today, Monday, is the 23rd, we're looking at a very interesting next 7 days, but we'll jump into that one. Good morning, Frank. How are you doing, man? Oh, Frank, this is about shaking people out, not us. I'll just keep buying more. Well, Frank, a lot of people have been shaken out over this. And the sad thing is that we actually have metrics for that in cryptocurrency. And the sad thing about it is when people are hitting that point and we do see a lot of folks getting shaken out, that tends to be an indication that the market's ready to start turning back around. And that's going to be very painful for the folks who got shook out, potentially having lost money on some of their different purchase prices and now have been shaken out. And well, it could be quite sad for some of those. Quite sad, because this is a market right now, as we've talked about many times, where there is not anything inherently wrong with the cryptocurrency markets. There are massive amounts of things that are inherently wrong with the global economy, but ultimately, crypto has really been taking it on the chin for no real good reason. And so when this thing does turn back around, it's not going to be something where people are going to be able to buy back in on that day. You know, the day the Clarity Act passes or the day that we have that massive market turnaround, it is going to essentially occur at such a speed that there might be the smallest percentage of folks that manage to catch that thing at just the right moment. Otherwise, exactly as you said, Frank, we just hold, dollar cost average when possible, and ignore when it hurts too much. Crazy Chester, good morning, man. Good morning, good morning. Good morning, Anakin. Good morning, Christina. Oh, good morning, Reno. Good morning, Judy. Crazy week ahead. Absolutely. Anakin, my wife, has been looking at houses near there and Jerome up in Colorado. Colorado is just an absolutely beautiful state. Absolutely beautiful. I had been looking at some ranches in Colorado at one point in time. I don't know about the cold, though. I don't know about the cold, and something's got to change on the politics stand front. Good morning, me. Good morning. Thank you so much, Trish, for making certain I don't try to get myself in trouble. Guys, please do remember that the content in this podcast is for educational and entertainment purposes, not intended to provide financial advice. Please consult with a financial professional before making investment decisions. Always an important one, especially when we talk about things like dollar cost averaging and we talk about different strategies, because that, in my mind, is a purely educational pursuit. We're talking about things that other people do. We're talking about things that successful traders do. That, to me, is educational. In the mind of Alphabet and our litigious society, they don't view it as being educational. So it is always an important one. I am very grateful to Trish for making certain I get it and don't go skipping it. Nature Girl, hello, hello, hello. Hope you have good news for us. Nature Girl, good news is relative, I feel like, in 2026. Good news was relative in 2025. It's been relative for decades, but yes, I think we have some good news, Nature Girl. But per the usual, when it comes down to things going on right now, you got to take the good with the bad. Anakin, if XRP goes to $1, buy the heck out of that dip. Absolutely, Anakin. Terry, pray for XRP. I am not all that worried on that front. I know that it is tough. It is very, very tough to see price movements like this. Let me get the screen up just to place it into context and be able to just show it hurts. I'm all over the place with articles again today, guys. My apologies, but it absolutely hurts when you look at it. It does. I have zero fear when you pull this thing out and you look at that max chart. I have zero fear about where XRP is going. But when you go and you look at this hurts. You look at this hurts worse. We really, I can only make this thing look worse. It is not fun. It is not easy to see. But when you really do ever have that time, Terry, when you're in that kind of state, remember, hit the max button, pull that chart all the way out, and you'll be able to see that we are just sitting at a point in time that has occurred before. Needless to say, you could have been sitting here back in 2017 at exactly the same $1.37 for XRP. It could easily go all the way back down to 30 some cents. If it does, it doesn't mean XRP is dead. It doesn't mean that everything is broken. It's just markets repeating, and markets repeat. If they don't repeat, they darn sure rhyme. Anakin, going to be 70 on Thursday. We need 10 inches of snow now to just get back to needed snowpack for the season. That's crazy, Anakin. It seems like this winter has been very, very, very split up. I know for Riley, my brother, over in North Carolina, this has probably been one of the most extreme winters in pretty much 2 decades for the Triad Piedmont area of North Carolina. I was in elementary school the last time that North Carolina had as harsh of a winter in that area as it did this year, to place it into context. And so it just seems like it has been so messed up. Yeah. HARP and other things that the government is up to seem like the likely answer to me. LG lady just in time for the good news. Oh, good morning, LG. And yes, indeed. Robbie Buck, please give Zester a thumbs up. This show has so much value you won't find anywhere else. Pray for the Clarity Act. Thank you so much, Robbie. And absolutely, right now, the Clarity Act is the big one. And not only is it the Clarity Act and just it passing, honestly, we need some divine providence to be placed upon that. We need not only for it to be passed, we need for some people to make the right decisions for the greater good on that one. As a matter of fact, let's go ahead and jump straight into talking about that one. First things first, of course, markets are not looking great, but remember, pull it out to max, and that just turned into a green chart. It is always a great way of placing things into context is to go ahead and just alter the timeline. Things are very, very, very scary when you choose just the exact time to look at. And right now, yeah, that's not a fun chart, but always remember, this is the same exact chart, just stretched out to the entire timeline and existence of XRP, not just focusing on our past year of what has been a fairly hard-hitting crypto winter. But because of your question, let's go ahead and jump straight to that one, Robbie, because this is where the rubber meets the road at the moment. And this is where we do need to have people. We need the people in charge right now to make decisions that are for the betterment of society, not for the betterment of their own bank accounts. And I think that we actually have a really great breakdown. I like the way that this guy has chosen to essentially explain it or to place it into context. Clarity Act showdown. March 1 is the red line on stablecoin yield. We talked about this on Friday. Last Thursday at the White House kind of took over in regards to the negotiations between the banking lobby and the Senate in regards to stablecoin yields in the Crypto Clarity Act. This was something that came right after the World Liberty Financial Forum last Wednesday. Last Thursday, we have that sit down, and the White House says, hey, March 1st is the deadline. You've got to figure this out. We need the Crypto Clarity Act passed now. And so, red line has been placed, and the entire conversation is based around yield on stablecoins. And so I really, really like how he says this right here. And so the crypto market structure bill story isn't really about crypto. It's about who gets to manufacture a digital dollar experience at scale, be it banks or crypto platforms, and whether that experience can legally look like a high yield savings product without bank level rules. The rules of engagement are about to be set. I really, really liked how that was, how he worded essentially that statement, because it very much is. It is, as we have talked about, that David and Goliath battle. The banking sector is currently fighting over their own future. Are we going to be looking at a world where banks continue to have the same control, the same ability to essentially be too big to fail as we move into the future? Or are we going to look towards a decentralized world where you and I are essentially being able to play the same role as the bank, where you and I are our own bank? I get my money and I choose what to do with it. I am in charge of keeping it safe. No one else gets to profit off of my financial gains. No one gets to profit off of me. Essentially break the shackles of slavery that have been occurring in the banking industry for hundreds of years. They are invisible shackles and an invisible cell, but they are very, very real, and they always have been. And they're not going to go away if we continue to allow banks to control interest. We could have an entire debate about interest in and of itself. You can go way back. into history and have a debate on that one that would go all the way back to the birth of Christ. And we could debate all of those different things, but ultimately, this is, for the banking sector, a point of either they must fight or they must accept that they are going to lose. And that's why it's so serious. That's why we are at an absolute dead halt on a crypto bill that this, to the lay person reading the articles or watching this, it makes no sense. Why are crypto companies and senators having a fight with banking lobbies over specifically interest on stablecoins? Just that. It doesn't make sense to anyone. And I think that they know that. They're aware of it. The fact that essentially they're having a debate in public, and they're able to have a debate in public that I don't think these type of people would ever have, for us to be able to see if they thought we understood. The only reason they're comfortable doing this and they're comfortable holding the Clarity Act hostage is because they know that 99% of everyone out there has no earthly idea what this argument is about and how important it is. We are currently watching a decision be made about whether banks are going to continue to control our financial system in the future or not. We are talking about hundreds of multi-million, $100 million, hundreds of billion-dollar companies that essentially could very much be in danger in the near future, depending upon how this bill goes. And it's crazy to think about. It really is crazy to think about. And I have a hard time placing it into a historical context that we can look back on and say, well, this is like at this point in time. It's hard to even find something to look towards, because we are right now having a massive, extremely important debate occur in public that is going to affect every single living person and their descendants, potentially in perpetuity. And that debate is being had, and yet no one has an opinion on it. No one has an opinion on it. It's like they're deciding if you're going to be able to have a child or you're going to have it genetically altered. They're having a debate that serious in public, and no one's paying attention because they don't understand it. And so this one that's the reason I said popcorn required, guys, because this is a show. Absolutely a show. And so what have we heard, though? And so that's kind of sets the stage for just how important of a conversation this is. But where are we currently at on that one? And so White House stablecoin yield talks claim to be productive. Governments always say that conversations are productive unless they have a reason to say they're not. So that could be nothing more than, pandering for the cameras and the journalists. But the viral summary says that White House-led meeting brought draft text, narrowed the debate to stablecoin rewards. So we're no longer talking about the rest of the Crypto Clarity Act. It's just stablecoins, and pushed a tight timetable towards March 1st. What is verifiable from sources closer to the process is that the White House Crypto Policy Council has been convening bank and crypto stakeholders specifically on stablecoin yield. Participants have described the discussions as productive while still lacking a final compromise. The March 1st deadline is a negotiating weapon, not a magical legislative switch, but it is a clear signal that the White House doesn't want to spend political capital on maybe later issues. And so ultimately, it is all coming down to stablecoin yields. And the reason that it is all coming down to stablecoin yields is because if crypto companies are allowed to offer interest on stablecoins, the banks are about to lose essentially a massive, massive portion of their liquidity because it will no longer make sense to keep your money in a bank. It would make more sense to keep your money in a centralized exchange. That is really what it all comes down to. Should yield be allowed on stablecoins? Stablecoin and crypto companies can offer yields in the 4 to sometimes even 10% APR rates paid directly to you, monthly compounding interest. There is no bank on the planet that will give you that offer. The reason they won't give you that offer is because that's how they make their money. Essentially, that is their piggy bank, and it would destroy their business model for them to start handing over that interest that your capital is earning. And that's why we're stuck here. This could very much be the bill and the decision that places a nail in the coffin of big banks, at least big banks in the way that we're used to them. And that's why we're at such an insane point right now. That's why we are not going to have any major compromise occur, because they believe that they are essentially fighting for their futures. Now, no yield on payment stablecoins is already federal law. The Genius Act bars permitted payment stablecoin issuers and foreign payment stablecoin issuers from paying any interest or yield solely for holding, using, or retaining a payment stablecoin. This already occurred during the Genius Act. And so they're not allowed, already set into law. This was not something that the crypto industry fought to a major degree, didn't love it, but in no way is it a major problem. This has already been set into law. It is also hard codes the policy fear. Stable coins that threaten bank stability or the deposit insurance fund should be constrained, including limits on issuance by large non-financial public companies. So why are rewards being renegotiated? Because issuer rules don't automatically stop intermediaries, wallets, exchanges being the very key word, because these are the banks of the future, and payment applications from recreating yield via rebates, points, or credits. Banks want that shut down. What banks want is for crypto to not be able to be a bank, because that's their job. And so they just don't want you to be able to be a bank. And so what they are extremely afraid of right now are the wallets and exchanges that, if you just look at it on paper, are essentially a bank. A centralized exchange is a bank. They hold your money. They allow you to exchange between different currencies. Sounds a lot like a foreign exchange bank account. They allow you to potentially withdraw, make payments. So you can actually get like a Coinbase card or Gemini card, which allows you to make payments directly from your exchange account. You're capable of investing directly through them. So you're capable of staking your crypto in order to earn a return, in the same way that I could say, put my money into a savings account at a bank where I would slowly receive a return based off of the interest earned from the bank loaning my money out. It's all starting to sound a lot like an exchange is a bank. And that is what the big problem is. An exchange is a bank, and a bank is an exchange. And that's what they're really, really, really mad about. And that's where the big problem arises. And this conversation is not going to go away, because it seems like at this point in time, in order to get the Clarity Act passed, some kind of compromise is going to occur, which is going to kick this can down the road to some degree. Mile High Trish, wouldn't banks be forced to offer stablecoins too? Absolutely. I think the thing is, Trish, is that banks want to control this stablecoin market. And they're the ones who really should have been in the best situation to do it. The problem is They actually weren't. The great thing about stablecoins is that the money, the value backing up the stablecoin is public and transparent. So if there is $100 billion in the bank account, then there are 100 billion tethers. Okay, 100 billion in the bank account, 100 billion tether. That sounds like who should have been at the forefront of this industry? Banks. Because they're the ones who have all the money in the bank account that could be used to back up the digital currency. Makes sense. But what if the banks don't have any money? Because they've never had any money, and they don't have any money. They just write blank checks from the Federal Reserve banks that print the money for even your local bank. And so I think what essentially occurred is that the banks don't actually have capital to launch a major stablecoin. I question whether many of the banks actually are capable of putting together that amount of liquid real funds to back a stablecoin, because Trish, it makes so much more sense that Wells Fargo would just release a stablecoin today and be like, there's $100 billion supply. We've got $100 billion sitting in a bank account. We win. But they have never done that. And I honestly think that it's because the capital doesn't exist in typical traditional financial banks. I wonder whether it even is there. Anakin, the government is always productive when it comes to taking our rights away. They do. For some reason, they are willing to start working overtime when it comes down to taking away our rights, but they are not willing to work overtime to help us out. Imperio Austro-Hungaru. What is up, Imperio? I'm doing well. I hope you are also. Crazy Chester, with the possibility of bank bail-ins, how vulnerable are deposits in crypto exchanges? That's a good question, Crazy Chester. And we are seeing banking licenses being issued to crypto companies. Ripple Labs has been issued a banking license. Coinbase has been essentially issued a banking license. There is a very good question to ask there. What would occur essentially when an exchange, a crypto exchange that has a banking license, were to have an issue? Are we going to then have a debate about FDIC, insured deposits, et cetera, et cetera? Crazy Chester, since the passing of the Genius Act, and even before that, just with the halting of the SEC's crusade, banking licenses started to be issued to centralized exchanges. And so there is precedent here. Ultimately, Crazy Chester, the great thing about crypto, and even on these exchanges, is should they attempt to do it, we will be able to prove it. We'll be able to see it. They will not be able to hide that. But I do hope, and this is absolutely an ideological stance, I do not believe in any form of bailouts in any sector for any failed enterprise. Ultimately, the consequences for running a horrible business should be the failure of the business, regardless of the sector that it fits into. That being a very, very, very libertarian stance, I could easily argue that that stance is not the best for the average person, because there are certain sectors and certain industries that possibly the failure of could lead to a lot of people suffering who it isn't their fault. But when it comes down to it, we need to make a very clear statement from the beginning. I think in the crypto industry, we do not want your bailout, and we will not accept it. Ultimately, if a company fails, the company fails. That is a conversation to be had in a courtroom. That is not a conversation to be had at a Federal Reserve. To me, that one's easy, and it also is easy across other sectors. You know, I don't see any reason to bail out any of our banks because of how big of a crap hole they dug for us with their quantitative easing. doesn't make sense to bail them out, except for the fact that we're all going to be the ones that suffer because they don't know how to run a business properly. That one's a tough one. That's a catch-22. Ideologically speaking, in a perfect world, the answer is simple. Extremely simple. But I do not think we're going to see any form of bailouts in the crypto industry in the form of a bailout. Something I do think we may see that some people will view as a bailout, because this is how Elizabeth Warren, Pocahontas, is currently trying to say. Pocahontas is trying to say that if the United States government invested in cryptocurrencies, that would be a bailout. That doesn't make sense. That doesn't make sense at all. Is it a bailout when the United States government buys vehicles for the military from American-based companies? Are we bailing out Ford because we decided to buy trucks we need from Ford? That just doesn't make any sense. But that is the exact logic that Elizabeth Warren is currently out there parading around with, is if the United States even buys crypto, she views that as a bailout that specifically benefits everybody's favorite orange boogeyman. Rich Roper, RV happens when you buy XRP or silver, one or the other. Rich Roper, I will be probably, if you wanted to break it down to percentages, I would immediately throw about 25% into cryptos, 25% into gold and silver, 25% into real estate, and 25% is going to be sitting somewhere in actual liquid dollars. Why that 25%? Because whenever massive issues occur throughout all of human history, liquid capital, regardless of the fact that it is currently being inflated out of existence and out of value, is still going to allow you to benefit massively. Look at the Great Depression. Right, wrong, or indifferent, I would rather have the ability to be able to start trying to help immediately. But yeah, something right around there has always been my thought. And Rich, yeah, it would be immediate. I would set up a dollar cost average on crypto and on precious metals immediately. And also start looking to directly invest in the mining companies themselves, in particular Guyana. I have a feeling people in the next couple of years are going to wish they had been investing in Guyana. I want to put a massive amount of money into Guyana immediately. I think it's going to pay off insane dividends. And again, I will buy 10,000 BIC lighters when SHTF occurs. I will have a commodity that is much needed more than silver. We need fire. Absolutely, Anakin. Absolutely. I've always been of the same opinion. In a true SHTF situation and scenario, I am not going to be running and trying to protect my gold and silver. I'm going to be protecting my lead. And that's going to be the most precious metal that I own. But lighters, that makes a lot of sense. Banks are businesses. Government should stay out of it. Absolutely. Absolutely. When it comes down to it, government needs to get its nose out of businesses when it comes down to bailing them out and things of that nature. The government's job is supposed to be keeping the corporations from abusing us. For some reason, that is not their prerogative anymore. The government was always supposed to be there to essentially keep these types of entities from making us the victims once again. It has lost its way a long time ago. All right, let's get to our other articles, though, guys. There's so much that is interesting on this front. There's so much to discuss. And this week, I think we're going to get whatever the real red line is. Right now, there is a possibility that they will just shelve this issue in order to get the Clarity Act passed. there is a possibility. This week is really going to be where we find out what the genuine red line is. Ultimately, we need for stable coins or digital currencies to be able to pay interest. Limitations could be acceptable depending upon what they are, but we need for stable coins to be able to provide yields in order to continue moving along this process. Because you've got to remember, it's not just dollars. What they are right now having a debate about with stable coins also means your gold and your silver. It means more than just dollars. Essentially, it would start to mean any digitized asset would be a stretch of that verbiage, where you could then start saying, well, everything tokenized cannot provide an interest return. It is a major, major, major non-starter. And so hopefully this week we get good news on this front. I am hoping that Trump is willing to seriously twist arms, because if this debate was had in the verbiage that the average American could understand, if he went on and put out a White House app, for the nation and discussed and explained what is currently going on, the American people would rise up to make this happen. This would not be a debate. The reason this is a debate is because of what we talked about earlier. Nobody understands what the heck they're debating. And what they really don't understand is how serious this debate is. And so, fingers crossed that we potentially either get a breakthrough from the White House meetings this week, or we get an actual statement and we get an explanation from Trump, because I think that would be the fastest way to get this thing passed. If Trump came out and explained in plain English what they're genuinely talking about right now, this would be so easy. So very easy. There would not be a legislator in the Senate who would be capable of achieving re-election if their electorate actually understood what they're trying to stop. Memes. Zester, have you ever had problems moving crypto out of Gemini? Meme, I have not had any problems moving out of Gemini, except Meme. And this is something that occurs across most exchanges. The only thing that I have had occur, Meme, is when you immediately make a purchase of crypto, they will hold on to it. They won't let you leave with it. If you bought it with a bank account, or if you received it as a reward. Essentially, what they have is a slight delay before they release the funds. So you see them in your exchange account and they're yours, but you're not allowed to leave with them yet. I have had that happen. I've had that happen on Coinbase and on Gemini. I think Frank and I talked about that one day. We don't like that, because then it essentially means that the exchange is saying they don't trust us. And I would have to agree with that sentiment. But it makes sense in the context of the current or old financial system. Ultimately, it makes sense, because a bank transfer could have been occurred, could take 5 or 6 days to occur. And at the end of that, you could potentially contest the bank transfer. And that leaves the exchange in a sticky wicket. And so it makes sense, but also it is a little insulting, because they're very much saying, hey, we know everything about you. We know where you live. I got your social security number, but I still don't trust you. It's frustrating. It seems like we are waiting for those that think they are the key players to be positioned correctly for maximum profit. Reno, I think that is another way of really putting it. I do strongly believe that there are those who have the power not to change where we're going, but they have the power to slow it down. I think we see the same thing occur in currency. I think we've seen the same thing occur throughout all of human history. When it comes to any economic change that stands to benefit the majority, we have seen the minority, the powerful minority, fight tooth and nail to hold it back. I think that's all they're doing. It can't stop it from happening, but they can darn certain put as many speed bumps in front of it as they so please. Absolutely. All right. We've got so many more articles. USDT triggers a rare signal last seen at 2022 Bitcoin bottom. All right. What does this mean? USDT supply has plunged sharply, triggering a rare signal only seen at the 2022 Bitcoin bottom, when peaked after the collapse of FTX. What occurred back in 2022? Heavy USDT redemptions marked the cycle low. What does that mean? So let's go ahead and jump on over here to my favorite little chart site, CoinGecko. Let's go on over to USDT. All right. What are they talking about? What is this signal? What does it mean? And this one's interesting because this is one of those signals that has always been extremely, extremely on point. Cycles have changed, though. Fundamentals have changed. That doesn't mean it's going to do what it's always done. But in the past, this has been a very strong indicator. That indicator is not on a value or price. It is on this number, circulating supply. So, what happened here? Check this chart out. This is a chart that is the market capitalization of Tether. What is Tether? Tether is a stablecoin. That means there's one Tether for every $1 of value that sits inside of a bank account or in a US Treasury note or whatever. There's $1 of value backing up your one Tether. Okay, look at this chart. What do you see that has been occurring essentially always? There is constantly more and more Tether being minted. More dollars are getting put into that bank account, more value, and more Tether are being minted and are beginning to circulate because there's enough value backing them up for that to be legitimate. Well, we have been on a multi-year, essentially, fairly straight line, having only experienced essentially 1, 2 times. Outside of one repeat that would have occurred right here back in 2022, where we saw the market capitalization of Tether suddenly start dropping. What this means is that dollars are being removed from Tether's bank account. That means they are selling US Treasury bonds. That is the number one highest percentage of Tether's backing. They are in US Treasury bonds, 5, 10, 20, 30-year Treasury bonds. That is where the vast majority of Tether's backing sits. In US Treasury bonds held in banks, not in the United States. Problem, but we'll stay focused for the second. This has only occurred a few times. And it is when people are, or Tether is removing backing. And so what occurs when that happens is these tokens have to be removed. When $1 billion leaves that bank account, 1 billion Tether tokens have to disappear. If they don't disappear, the stablecoin has a problem because the stablecoin is no longer 1-to-1 ratio. It's no longer fully backed. And if it's no longer fully backed, then everybody runs into panic and you have a bank run essentially occur on a cryptocurrency. Same idea. If you don't think a bank has enough money for everybody who is a client at that bank to withdraw their money, what happens? A bank run. Everybody runs to the bank trying to get their money out first. And then, of course, said snowball heads on down and forms into an avalanche. Same thing essentially occurs in a stablecoin. If there is a concern about the liquidity backing up the stablecoin, you're going to have a crypto bank run. What is occurring right now is people are pulling their investment out. They're not, moving it or shifting it. They are going directly to Tether. and they are saying, I want my dollars out. And when that happens, their dollars leave the bank account, and those coins, those tokens, they have to be burnt, removed from circulation in order to have that one-to-one occur. And this just started happening again, where Tether is having withdrawals directly from the bank account, essentially. This does not mean that Tether is in some kind of terrible position. I mean, look, it's happened before, and Tether still exists today. But this typically has been an indication of an end to a crypto winter or a bear market. And so if you were to take the same time frame that occurred back in the 2022 Bitcoin crash around the FTX collapse, and you were to go and say, take the same time period and go, okay, 2022, somewhere around that time, and then you were to come back on over here and you were to play the exact same game and say, hey, I want to come back to 2022, you would see that that was essentially the collapse point. And it was an indication of the bottom. Effectively, that FTX collapse, that Tether shift, and that signal were an indication that the market had capitulated. Essentially, it was about to hit as low as it could go. Now, it still spent another darn near year sitting in that time frame, but it did not continue to collapse. And that's what people are pointing towards in regards to this signal. As I've said before, I don't think we can really count on hindsight right now. Typically, markets, financial analysts, economists, all of these people, what do they typically do? All they do is they look at history and they try to find a point in history that looks the same as the market today, and they tell you what happened back then. That is literally their jobs, is to look at what happened in the past in markets and then try to place that into a modern context. Right now, in the crypto world, we have a history to look back on, but we have fundamentally changed. And so whether this repeats in the same way it has previously, that's a great question. And that's, I think, going to be something we find out together. Well, here was a fun one. I threw this article in because we had talked some about it. I thought it was interesting. Precious metals take the super cycle on chain as Copper Inu, a meme coin claiming to be pegged to the value of copper, skyrockets 225,000%. And I believe it was 24 hours. In less than 24 hours, the meme coin surged an eye-watering 25,000% as a result of the move. While institutions chase gold's run towards 5,000, a hyper-speculative copper supercycle is erupting on chain. Now, this is a meme coin, guys. Absolutely, guys, do not go running out trying to buy Copper Inu. I am in no way endorsing. I am merely just letting you know about something that happened just recently. I thought it was very, very interesting because we've talked about this. Matter of fact, I know people have been asking Andy about this one a lot on the copper side. And then to see it suddenly pop into the cryptocurrency space in a digital form and then just suddenly kind of blow up overnight, I thought was very, very interesting. It managed to peak at a $12 million market cap. And so we are not talking about something huge here, but it managed to jump 25,000% to a $12 million market cap. And there is now actually some other folks in the cryptocurrency space who are considering investing in this little organization and trying to take it from being a meme coin into being an actual copper-backed currency. It's interesting. We live in interesting times. That is for certain. All right. Why, though? Why, oh, why? Prices continue to be down. Market continues to be very, very low. Bitcoin sitting at $65,000 as of exactly right now. Why? Well, Bitcoin treasuries log a rare selling streak as BTC trades near 66,000. Continued selling from treasury companies and US Bitcoin ETFs threaten a deeper retracement for Bitcoin. Some analysts see it as a sign of a healthy flush in speculative leverage, but major takeaway here is that what we continue to see from the blockchain, from the data coming out, is that the folks selling tend to be those that are a part of traditional finance, or they are companies who massively over leveraged. They sold debt in the past years in order to start building crypto treasuries. That's how many companies did this. What they did is they essentially offered a debt stock offering. They sold debt. They said, hey, we're going to try to raise $200 million in order to form a Bitcoin treasury. Well, they went out there and they raised $200 million to form that Bitcoin treasury. Essentially, that is a debt-backed treasury. If the price of Bitcoin continues to go up, that strategy works out great. You have no problem paying the interest payments because, well, you took a $200 million loan, bought Bitcoin at 50,000, and now it's 100,000. Now you essentially owe nothing. And so all you're doing is just paying interest. It's no big deal. It works great when the market only goes in one direction. It does not work so great when you decided to make investments with debt and the asset you purchased is now worth less than when you took out said debt. And so this makes a lot of sense that they are stuck selling. One of the other takeaways here is that it does not appear that most retail investors are selling. And so the you and I's, us here in the community, from the statistics we are seeing, we are not the ones selling. Retail investor sentiment, while extremely fearful at this point in time, does not seem to be indicating massive sell-offs. Now, that is amongst the folks that have been holding for a matter of many years. That is not the case when you look at people who are newly investing in ETFs, exchange-traded funds. They are selling like mad, like crazy. And that is what is only deepening the overall market crash and where we're currently sitting at this point in time. Bitcoin treasury companies logged 3 consecutive weeks of selling. According to Capital Investments, Bitcoin treasuries buy and sell indicator shared by educational platform Coin Bureau, the metric tracks net buying and selling by public companies that hold Bitcoin on their balance sheets. It marked the first 3-week selling streak in the short history of BTC treasury companies. So it is literally the first time ever. It is a new industry, but the first time ever is still the first time ever. Continued corporate selling threatens to push Bitcoin's price towards a new bear market low, said Nick Pukrin, co-founder and lead market analyst at Coin Bureau. As contagion increases, we could see further corporate selling in the weeks to come, pushing the price of Bitcoin toward its bear market low. Who's selling? It appears to be corporate finance. It appears to be corporate finance. And if you take that and you place it into the context of what's currently going on in the stock market and across everything else, I think it starts to make a whole lot of sense. Man, come on, Zero Hedge, with your stupid premium articles. I just had this article pulled up. Well, that's frustrating. That's particularly frustrating, but I'll go ahead because I already read said article and I don't know why I got logged out of it. But the stock market investors and traditional finance have taken on an extremely, extremely conservative stance. Something we've seen in the past is that these traditional financial folks are more likely to sell crypto first than anything else. Why? It's liquid. It's liquid. They immediately have access to the dollars and funds. It allows them to essentially cover other investments in other sectors. And so we do have to wonder with this, we've got ETFs, we've got treasury companies in particular, these publicly traded companies, typically publicly traded companies that are making this shift and this move. And we see extreme fear in regards to the Dow. I mean, anybody with half a brain knows that the Dow Jones should not be anywhere near 50,000. That is not anywhere in the ballpark of reality. Corporations on a one-to-one basis are struggling massively with debt and issues, and yet we continue to see a stock market that seemingly cannot fail. I question whether we're not seeing this current mentality from traditional finance in the cryptocurrency space because they are preparing for a stock market crash, and that's what they're actually doing. They're rotating over the liquid funds from cryptocurrency in order to be able to balance out what they're about to take on the chin. I would not be in the slightest bit surprised if that was not exactly what was happening, because that is one other thing that we have seen before as well. Back during the COVID crash, we saw cryptocurrency essentially on a 48-hour ahead of time window. Everything's crashing in the traditional stock market, but everything had already occurred to the T in crypto market about 24 to 48 hours prior. What they were doing was they were literally covering all of the next sells because they were planning on liquidating the stocks. And so they were getting the liquidity out of cryptocurrency first in order to start liquidating across other sectors. And so gotta wonder whether that's not what they're up to. Crazy Chester, I think all the automatic IRA and 401k monthly deposits are keeping the market elevated. Crazy Chester, absolutely. I believe the only thing keeping the market alive at this point in time are the real dollars that are being put in by retail. They're the only real dollars. They're the only real dollars. Sounds like a crazy thing to say, but ultimately, they're the only ones that were actually produced. And that makes them extremely, extremely important. It's the same idea as the physical silver is what makes paper silver work. Paper silver is a scam that has worked for so long because real silver exists. Essentially, the modern fiat, modern monetary policy exists because the fake money is being legitimized by the real money. And we're the only ones who have the real money. All right. What more articles I've got? 58 minutes. Man, I have been on a roll of talking a lot. My apologies, guys, on missing out on some of these articles today, but here's a good one. We've talked about this a few times. With everything going on in the market, there were some thinking that, hey, well, maybe we're not going to see the same type of market capitalizations in stablecoins and tokenized real-world assets. Well, according to Standard Charter, it is going to stick to its $2 trillion stablecoin call, but it has trimmed its treasury bill impact. Standard Charter slashed its forecast for T-bill demand from stablecoins to $800 billion from $1 trillion by 2028, but maintained its belief that the stablecoin market will achieve a $2 trillion market capitalization by 2028. The largest current stablecoin in the world is Tether at $183 billion. And so Standard Charter, and they are not alone. Goldman Sachs, JP Morgan, you can run across all of them. They're all going to be placing this market cap in the number that is going to start with the letter T in just the coming years. Look at where we're currently at. It is 2026, and we are looking at $183 billion as being the largest market capitalization of any stablecoin provider. $74 billion down here in second place with USDC. That means that the overall expectation is that the stablecoin market is going to grow a matter of minimum 5-fold in a matter of less than 2 years. And that is the most conservative numbers and the most conservative outlook you could take at it. Ultimately, you go over to JP Morgan. They're claiming that number should probably be more around a number like 4 trillion. And that real world asset tokenization will achieve 10 trillion by the year 2030. And so even on a very, very conservative, this is numbers that were brought back down because of things currently going on in the market. They still view the stablecoin market on its own as achieving a $2 trillion market cap in the next 2 years. That would place it as essentially the fastest growing sector on the planet besides artificial intelligence. At least if you looked at things right now. All right, let's see. We've got so many more, and we're probably just going to have to save some for our next chat. But let's see. We got a really good one to go out on here. Yeah, let's go for that one. Bitcoin's true message. It's not decentralization. It is emancipation. Bitcoin's core isn't decentralization. It's emancipation via self-sovereignty, financial freedom, and capital mobility, empowering the unbanked and countering centralized artificial intelligence. This is an opinion piece written by a Dr. Merav Ozair, breaking down that ideological stance of cryptocurrency. And he does use the term Bitcoin, but really what he's talking about in this article are digital currencies universally. He uses Bitcoin because it's the biggest one around. And so a very interesting read for folks out there on the ideological standpoint. Why are we fighting so hard? Why does this technology exist? And so wanted to put that one into the chat so that anybody who does want a nice little read can go through that one. We've got to remember that the ideological standpoint and our personal beliefs are devoid from the financial system. Ultimately, we've got to look at it logically, and we can't let I can't let my extreme libertarian beliefs on the financial system mean that I throw out the good, because I believe there could be something greater. But I think it's a really important one for a lot of folks out there that don't realize that this is an ideological battle, and that cryptocurrency and this technology is more than just a new financial system. It's honestly a new way of believing, a new understanding of how a financial system should work. It's a complete reimagining of where the power should lie in a financial system. It's a complete reimagining of ownership and what it means to own something. It is the greatest financial shift in all of human history. That is true. But it is far more than that when you look at it from an ideological standpoint and you see what we gain or what is being given or what is potentially being taken away by making this shift. I think it's an important one to go into. And for maybe some of those out there that haven't gone through entirely on that ideological narrative behind Bitcoin, and it makes it make a lot more sense why you see the folks who act the way they do, why you have those people who are those original creators of certain cryptocurrencies, or those original investors, why they act the way they do, why they support the things they do. Why is the cryptocurrency space so overwhelmingly conservative when it comes to the primary investors and holders in certain cryptos? Why? Well, that type of stuff will start to make a lot more sense when you dig into the ideological reason that this technology exists. Why did Satoshi Nakamoto or whatever he is or whoever he is, why does this technology exist? Why are there so many people who have literally made it their life goal to spread this. Why? Well, it's not because they believe they're going to become billionaires on account of it. They believe that they are literally spreading the good word, that they are bringing forth a new system that will finally empower the average person. That's why there's so much strong beliefs behind so many of these crypto communities. And I think the articles like this are interesting reads for the sake of that, because it's far more than just money and wealth. There's a lot more at stake here than whether Zester gets to retire in a mansion or whether Zester's going to be retiring in a retirement home. There's a lot more at stake than just our own personal finances. And I think it's always good to keep that in mind. And little articles like that are always a good reminder. And so, with all of that, it's been an hour and 6 minutes. Thank you so much, Trish, for sticking with me on this one today. And thank you guys so much for joining me. On Wednesday, we are going to be going through and we're going to be setting up a Ledger hardware wallet. I'm going to be wiping one of my ledgers. So that's scary. I'm going to wipe a wallet off of my Ledger wallet, one of my ledgers, and I am going to create a brand new wallet on that ledger. We are going to do that on Wednesday. And so for everyone out there on Ledger questions, Ledger setup, etc., we are going to do a wipe of a Ledger wallet because there's a whole learning experience there for everybody, and also an extremely scary thing to do. And so y'all will get to watch me be scared along with you. But we will be doing that one on Wednesday. That is going to be, unless some kind of crazy news comes out, that is going to be the entire focus of the Wednesday stream, is going to be wiping a hardware wallet and setting up a brand new Ledger hardware wallet, and then trying to send some crypto to it and showing folks kind of what I do when I have something like that is brand new. And so I'm looking forward to that one. I hope for everyone out there that it will be a great learning episode to look back on, so that those who don't have a hardware wallet yet, you'll always have that episode to go back to. Those who have a hardware wallet already and have been scared to set it up, hopefully it will provide that walkthrough and that sense of security, because I have a feeling once we dig really deep into it, I think folks are going to feel a lot more comfortable about how it works. It's another one of those things that's just scary at first. All right, though, guys. Thank you so much for joining. Thank you so much, Reno. Roberto, dang, I missed it. Don't worry, Robert. We will be back on Wednesday, and that's where we'll be talking all about hardware wallets, and we'll be setting one up. Mile High Trish, been there, done that. It works, but it is scary. It is absolutely scary, and I'm hoping maybe that watching me go through it publicly with everyone, I'm hoping maybe that will make it a little less scary. Of course, who knows? Maybe that will make it more scary. But I've got a good feeling about it. It's going to be a great show. And so, love you guys. Thank you so much. I will see you again on Wednesday, 11:30 a.m. Eastern Standard Time, for our Russian roulette, playing with Ledger hardware wallets and wiping them and bringing them back online and showing folks that even if you lose your hardware wallet, you are not going to lose your crypto if you know what to store and how to do it right. And so it's going to be exciting. I think that'll help a lot of folks. All right. I'm getting out of here. Peace, guys.